over. So starting off with the overall monthly time frame, right? As everybody can see right here, my target, right, is of course the final target is this right here. I've talked about us getting a low sell in or a high get a sell in here so soon. So I am actually bearish, believe it or not. A lot of people are actually bullish still. All right, I will talk about this. All right, I'll talk about this. And now a lot of people are switching to a bearish stance. Right, a lot of retailers, a lot of people out there switching now. Oh, this is the high. We're gonna be the high. We're gonna see if it's actually gonna be the high. We'll see. And I'm particularly gonna talk about what I think will happen, right? But we are actually bearish longer term. That's just what you gotta understand. We are bearish reaching for this. All right. So overall, I think we're gonna reach for this original consolidation. That's our final target. Now going into the weekly, right? So on a weekly stance, right? What I'm actually particularly looking for in this case is, of course, as y'all know, the month is overall ending in 7 days. All right, this is not 7 trading days. This is 7 days. So it's more or less a week of trading, and then next Monday, not this week and not next week, but the week after that is actually the new month. So for the next week, I'm actually watching continued lower prices taking lower term time-based liquidity. So a low time-based liquidity. Now, what do I think will become time-based liquidity? I think this low right there will become time-based liquidity in the form of previous weekly low. So I think we're gonna take that out now next week. This low right here. Trade into this 0.75% mark of this monthly. And now when we start trading here next week, I think we're gonna trade up higher, reaching for the engineered red tick Ys. So we have red tick Ys right here. I think we're gonna trade down lower, take this low out, do an institutional for trade one final time higher here, and then we're gonna have a high get us held in 1st of November, and then reaching down lower for this market maker sell program and this bigger market maker sell program, as everybody can see here on the monthly. You can see the original consolidation, reconsolidation, and reconsolidation here. We probably will get a high sell in soon, and then trade down lower, reaching for this, right? So I don't think this is the high. I think the high will overall get sold in after trading here, taking this time as liquidity, one final push higher, and then lower prices. Now I'll also go into the daily and speak a little bit about that, because as everybody can see, we don't particularly need to take even this low. We can just trade into this order block right here, and from this order block you can see this is the one of the monthly. So you can see this is the high of the monthly. Going to the daily again, you can see we could just particularly trade into the mean threshold of this, higher prices, reaching for these rating Ys, and then seek the low prices. So something like this. Alright, that's what I'm looking for at least. So I don't think this is the high, because yeah, because of external reasons, the students already know that, but as well as another reason, which is the 6 stage of distribution and multiple other things, but not this. I don't think this will be the high. I think this will be an engineered rating Ys, and I think we're going to take out this time-based liquidity here before us reaching down lower and reaching for this original consolidation in here. Now that's my higher time frame narrative. Now let's just go into a little bit of a lower time frame here. So on the 50-minute time frame, what I think will happen tomorrow is that on Friday here, I think we're going to be bearish. So I think we're going to reprice a little bit higher, taking out Asia high, and then just continue down lower. Just reaching down lower here. Now on next week, I think Monday, maybe trading into the mean threshold here. So that's why I have this level marked out. It's just 103.657 here, something to that extent. And then reversing off of that level, reaching, taking this previous weekly high, and then this, which is both time-based liquidity, and then reaching down lower. Now in 2 weeks. So 1st of November is where I'm watching the high. Right here. So we have some time left, right? You can see how much trading we have left. Let me see. Yeah, here 1st of November starts right here. I don't know why it's not loading, but it should be loading here. Over here, guys. That's 1st of November here. So here, that's overall where I'm watching the high. So low prices, mean threshold, or this low and this 25% mark of that fair value gap. Then high prices taking this, and then this and then high settled in, and then low prices. Hopefully everybody understood. But let's just dive right into your USD. So going into your USD quickly here. What I'm thinking will happen overall is if we go to a monthly stance, what you all can pretty much quickly see here is that all of this is just a reconsolidation right here. This is a regional consolidation, reconsolidation, reconsolidation, and we're watching the second expansion reaching for the previous yearly high here into this, which is of course the thing we're gonna inverse. This is high time from objective, as everybody can see here. Now on a weekly stance, everybody think we pretty much have reversed here. What I'm particularly keen on is of course us reaching up higher here. Now next week I think we're gonna reach up here. You can see here from this to this, that is a fair value gap. I think we're gonna reach up here. Maybe have an SMT between DXY and its low. If you much go and do this, gonna do DXY here. That's good, so everybody can see here. Let's see. So as everybody can see, right, the weekly and weekly right here, and this call will get uploaded to YouTube. All right. So right there the low, right there the high. If we now don't take this, and instead if we go to the daily here, and daily here, you see tomorrow what I'm watching, right, is either us trading down to the mean threshold of this, and then Tuesday reversal here, higher prices, reaching for this timeless liquidity, which will become timeless liquidity by the way. It's not timeless liquidity now. We could particularly tomorrow reach higher and take out these equal highs. Now what would that cause? That would cause an SMT, right? We're trading to the mean threshold. However, here we actually reach up higher and take out this high. That would be an SMT, right? And that would seek us even low prices. So this is particularly what I'm watching. I'm watching the short over here, and I'm watching longs up to this. Now we'll also go in and talk about the market maker buy model here. So going in here, taking just away this, and going in here again, you'll see on a 50-minute time frame here. This whole thing is actually a market maker buy model, or we can go into the 4-hour here. So as y'all can see, of course we have the higher time frame market maker buy model, but we also have this shorter term. You can see the original consolidation more or less here with the equal highs, reconsolidation, and I'm thinking we're gonna reconsolidate here tomorrow, expand, reaching into mean threshold of this, lower prices, and expand the real expansion like this. Hope y'all really understand this, right? Makes sense? Kinda. Alright. Yeah, perfect. Of course, follow your own narrative. So, of course, this could possibly happen, right? This is what I think will more or less happen. But I was actually wrong on last week analysis. And what I'm not doing here is I'm not thinking this will be the low. I'm not trying to predict any lows. Instead, I'm just watching high prices now tomorrow, and I'm watching a reversal over this highs. These, of course, could, no, it does not need to happen. I could be wrong on this as well. So always follow your own analysis. So if you have anything different than mine, stick to your own. All right, that's what I recommend. Don't listen to me blindly. All right. However, if it aligns with your bias, that's good. All right, that's good. Not for me, not for you, but particularly because then you can maybe find some other things and learn maybe something new in this. And even if your analysis do not align, you can maybe learn some other things if it does really happen, and does really more or less play into the analysis which ends up happening, you know, after the fact. So you can maybe go back to this call in half a year or something, and actually look back on, go and look, oh wow, it actually happened or something like that. Interesting, and go into the things I've said, and then go into the actual things which ended up happening. Now, higher time frame teachings is done. It's not higher time frame teachings. It's just, you know, some things, right? And I'm not gonna have any particular questions at the end. Or shall I? Let's see what the time is. However, now I just wanted to go into the STE. Alright, because that's pretty much what you guys decided to name it. Alright, So it's called the STE, and I'm gonna teach you some real advanced stuff today. You're gonna be real happy today. Should be excited because this is unique. This is something which no one had talked about. So let's go into Euro, and we could go into 5-minute time frame. Now in the 5-minute time frame, I'm actually gonna show you this Monday's STE, right? And I've shown you guys this particularly much, and not much, but I've shown you guys this 2 times. And I don't know if you saw the TikTok, but the TikTok should not have been so well known, right? Because it's more or less like a random thing. I just posted a random thing, right? But what I said was like, if you look at it closely, does not really look like anything crazy. If you look at it close, you'll be impressed. So as everybody knows, here, this is the times. You have 9 to 9:30. This is Fed wire injection time. First, second Fed wire injection time between 15 and 15:30. Now, either this should create intermediate highs where we sweep them and it's an ST, or it creates long-term highs and it's still an ST. So these times can still be used without the sweep of those highs, right? Because either it's an intermediate high and we just sweep them and then reverse, because you have to overall combine this with a high time frame narrative. So you have higher time frame narrative. That's the first thing. I can actually write up the thing here. So first thing, higher time frame narrative, which I've taught. Second thing, order flow. Third thing needs is draw on liquidity. Fourth thing, of course, time being right. Fifth thing, why is it sweep or high? Either intermediate highs or long-term high. I don't know if you guys can see this. Can everybody see this? Or is it too small? Just write yes or no if you'd like. Yeah, I can see this. Perfect. So this is the model. Very simple. Very simple. You decide where your target profit will be. I've taught you the best take profit is stop loss placement for this. You can mix it, alright? Meaning it's not set, alright? That's not the mechanical parts. This is the mechanical parts. So this is the only thing you're looking at. Now, as you can see, 15:30 high actually is an ST, as it's more or less get it swept here. This creates pretty much a long-term high. We could say it's a long-term high, as you have 15:30 here, which created a high. We were bearish. We were looking for low prices, as you all know. Why were we looking for low prices? Particularly, we're looking for low prices as we're super bearish here. So, just low prices here. Now, the crazy stuff I showed you, and of course this will be mind-blowing for a lot of people, is that you actually can deviate it. So you can deviate the ranges to find out what intermediate highs and intermediate lows, which will come into fruition at a later time. Now I'll show you this, and this would be the only call about it, maybe. Let's see. But where these deviations align will be the low or the high, a long-term high or a long-term low, right? And what y'all will notice, it's more or less that we had an alignment right here. We have half of this, and we have half of this. That created a low right here, and from there we trade up higher. Now, what do you think happened here? We had another level right here. So look, we have this half, we have this high, lower, right? And then it continues. What did we get of 9:30 here? What do y'all think? 9:30. Let's see actually. So we have this to 9:30 high here. What do you think happened? Alright. Let's just do this way as well, so you pretty much can see. I'm sorry for that. Should be a little bit higher here. So as everybody can see, half, half, and you combine it with a new one. Pretty much half. You see half here. So what do you see? I see half, third, pretty much half of this, high. Now, same thing goes lower, right? So now you also have the 15, you can combine it. Now, of course, only use 3 at a time. So otherwise it will get too many levels and will become too random, and levels won't work as well. So you can only pretty much use three at a time. So from 15 right here, 1530, which is here. And all of this is ranges, right? Which I'm deviating from. Now we can use these two, whatever. What do you think will happen? Do you think we got a level here? Yeah, probably. We got half of this. And half of it pretty much aligns with this 0. And look what happened. High. Now, this maybe looks random, but look at it. If you like look into it, like, is this a level? No, it's not a level. Right? It's not a level. Is this a level? No, it's definitely not a level. Is this a level? Yeah, it's a level. This and this. Bam. Is this a level? No, it's not. Is this a level? No, it's not. Is this level? No. Is this a level? Could possibly be. You can see half here. Could possibly combine it with a 10th, and look what happened. Is this a level? Definitely not. Alright? It can only use it once. So once the level has gotten reacted with, only then it overall stops working. So as soon as you see any high or low getting reacted with this level, you should delete that level. Alright? And you should only use 3 of these ranges at once, as otherwise you get too many levels and the levels won't work. So you can use this, this, and this to get next day's highs or lows. High of today, low of today. You can use this and this and this, and if you would actually use this, you pretty much get this level. You'd also get a level right here. How would you get a level? You had 0 and you had this. Look, they're actually combined. So you know this is a strong level. This right here and you know pretty much price will react and go down lower. More accurate than CBDR. Test it out yourself. I would say it's much better than the CBDR. Alright? Much better. But I recommend it. And this is a thing I use in combination with the STE. So I use Fedwire deviations. Alright. Now, did you like it? Just write yes or no.